Gold's incredible performance ascended to new heights recently, shattering records along the way. The potential of precious metals is generating excitement among experts and amateurs alike, with the spot price hitting an astounding $2,125 in offshore trading. Today, we will share Peter Schiff's thoughts about the change in prices. Let's dive deeper. Renowned financial analyst Peter Schiff recently offered his thoughts on a podcast, speculating that the bull run in gold is just getting started. Schiff confidently predicted that gold will rise many times over from its present heights, saying that these record-breaking moments are just a preview to what lies ahead. Gold reached a historic high of nearly $2,000 per ounce at the end of November 2023, a first in the metal's illustrious history. This accomplishment demonstrated the strength and continuing attractiveness of gold as a valuable asset. Peter Schiff, who is renowned for his astute observations of the market, sees the chance to investigate the causes of this extraordinary rise. He was able to explain why he thinks gold is going to see even bigger gains on his show. Schiff claims that a number of economic issues are the foundation of gold's positive trajectory. The metal's attractiveness has only grown as a result of recent international events, as it has long been seen as a hedge against inflation and economic uncertainty. In these unsettling times, gold has become a dependable store of wealth for those seeking stability. Schiff's analysis indicates that this trend is likely to continue, pushing the price of gold to all-time highs. Notably, a paradigm shift in gold is indicated by the closing price above $2,000 per ounce in November 2023. This noteworthy achievement demonstrates the metal's adaptability and appeal in the current economic climate. Gold shines out as a sign of stable finances amid the world's problems, which include geopolitical tensions and the ongoing epidemic. Silver stealthily steps out of the shadows and catches the eye of seasoned investor Peter Schiff, while gold takes center stage. Though silver's rally has not matched the intensity of gold's, Schiff sees unrealized promise in silver. He compares the two precious metals and points out that silver still has a double distance to reach its top, indicating a compelling chance to purchase. The reason for Schiff's confidence is that silver is more affordable than gold, which makes it an appealing investment option. Schiff's insight provides a subtle element to the financial environment in the dynamic world of precious metals. With gold continuing to soar and silver still having potential to expand, there's a special opportunity for investors who are navigating the uncertainty of the world economy. The appeal of precious metals as a safe haven is becoming more and more apparent as markets fluctuate and uncertainty endure. When considering their next move, investors can find comfort in Schiff's depiction of the silver lining, which is that silver's rise to a record high suggests a compelling and potentially lucrative undertaking in the face of changing economic conditions. Excitement in the financial world has been sparked by gold's recent records and Peter Schiff's positive outlook. Investors seeking stability and long-term value are still drawn to the precious metals market, particularly gold. The recent spike in gold prices has many investors fascinated and bewildered in the ever-evolving world of finance. Although the price of gold has surged to all-time highs, the excitement around mining equities has not kept pace with this increase. This unusual conduct contradicts the common thinking linked to bull markets, according to Peter Schiff. Schiff claims that we are not seeing a normal bull market during this advance. Historically, when markets are rising, mining equities usually see an even bigger spike than the precious metal they are extracting. Schiff, however, argues that things are different now and implies that the market is negotiating unfamiliar territory. As he so eloquently states, by definition, this is a bull market. The price of gold is at a historic high, so when you're at an all-time high, it can't not be in a bull market. Even in this unquestionably bull market, gold equities have not kept up with the metal's extraordinary gain. Schiff notes that the all-time record highs for gold stocks are far off. To put it another way, gold stocks need to rise by an impressive 12% just to hit a 52-week high, much less a record high. In a hilarious way, Schiff refers to this market as the Rodney Dangerfield bull market, since it is unappreciated. This market, according to Schiff, has been rising against a wall of worry. It appears that investors are cautious, and the general belief is that the current gold price rally might not last long. It is true that the current rally is unusual in that there is a lack of trust in a long-term increase in the price of gold. Conventionally speaking, gold equities would outperform the metal in these conditions, but the state of the market today has defied this prediction. There's a noticeable lack of confidence among stock investors as they still expect gold prices to drop. Investors' concern about a possible decline in the price of gold is reflected in the pricing of gold stocks. With astute observation, Schiff notes that nobody has confidence that the price of gold is going to rise. An already unusual rally becomes much more problematic due to the prevalent mood. Schiff's perspective illuminates the larger economic picture by delving deeper into the causes of the particular dynamics of this market. This particular bull market has been influenced by the global financial environment, which has been shaped by a variety of factors, including geopolitical tensions, economic concerns, and the ongoing pandemic. The conventional standards of market conduct might be changing as investors face hitherto unseen difficulties. It becomes clear that the current gold rise is not following a straight line as we negotiate this unknown zone. It is possible for the price of gold to hit new lows, according to Peter Schiff. Many other factors interact with the price of gold and the performance of mining equities to create a market environment that is not what is typically expected. Investors now operate in an environment where past performance may not be a trustworthy guide, and cautious optimism is the norm. Peter Schiff offers an interesting viewpoint on gold and the market. He feels that the prevailing pessimism about gold actually validates his optimistic view. He is mostly concerned about when investors will realize that gold prices have the potential to rise dramatically. Peter believes that when bears stop being so skeptical and start investing in gold and gold mining equities, then will be the true turning moment. Among Peter's more noteworthy claims is that even with gold's recent price surge beyond $2,000, he believes it is still cheap when taking inflation into account. He thinks that gold may need to rise beyond $3,000 in order to hit a high that is adjusted for the Consumer Price Index, or CPI. His audacious forecast suggests that he is confident that gold prices will eventually rise. Peter Schiff notes that large participants such as hedge funds, pension funds, and endowments are not present in the gold market and predicts that these organizations will eventually come to understand this. He calls it an economic awakening and predicts that it will occur in tandem with an economy that is deteriorating, as seen by an increase in unemployment and a slowdown in GDP growth. Although he acknowledges the recent 5.2% GDP growth, he blames it on borrowing by the government and consumers and warns that the ensuing spike in the national debt may mean a reckoning is coming. His story is based on the idea that the economy's seeming expansion is fake and is being driven by debt. He predicts that the effects of this borrowed growth would eventually show up as inflation. He contends that this will act as a stimulus to drive gold prices well above the present $2,000 level. Peter argues that the markets are undervaluing the danger, despite the widespread perception that the Federal Reserve has effectively controlled inflation. He notes that the Consumer Price Index has not yet hit the 2% target, in spite of predictions of interest rate reductions in March. According to Peter's prediction, there would be higher inflationary pressures, indicating a discrepancy between market perception and the underlying inflationary forces. In his forecast of a sharply rising gold price, Peter highlights the necessity of a big shock to elicit investor participation. He believes that as more investors become aware of the possibilities in the gold market, the first spike will be followed by a slower but more steady upward trend. According to Peter, The crucial element is that gold prices will rise significantly upon this awareness. Peter Schiff asserts that the current gold bull market is mostly due to the dollar's decline. He makes the audacious prediction that the dollar's collapse is still in its early phases in his prognosis. If his prediction comes to pass, there may be a time when gold prices skyrocket due to a further decline in the value of the dollar. His thorough study creates a convincing case for a notable increase in gold prices by combining a number of variables, including inflation, economic development, and the influence of key financial players. But the question is, how will the prices reach its new low? Let's wait for it. Thank you for watching. If you enjoyed watching our content, then do like, share, and subscribe to our channel. Don't forget to comment your thoughts below.